Are we heading for a world financial meltdown again? Welcome to Mark and Pete. Here's a thought.
If a bank sank from sailing into troubled waters and liquidity meant it could not stay afloat, then the dank flank of those in financial quarters watch cash flow drain with every note.
Yes, I'm afraid.
Well, are we heading indeed for yet again another financial crisis? It seems that in the Western world and indeed in Asia, that many banks seem to be in trouble. Now, the reassurances that are being given by the US President, Joe Biden, says that the financial system is safe, folks. Yes, and following the collapse, though, of two US lenders, should we be really concerned, Mr. Biden? Now, if we sort of take a little bit of a step back here, two US banks, yes, that is, of course, the US-based Silicon Valley Bank, SVB as it's often known, and Signature Bank, both collapsed. Now, Joe Biden has said that he's going to do whatever is needed to protect the banking system. Therein lies some challenges, because it's not just two banks. We've also seen in recent times Credit Suisse have said that they need bailouts, and in fact billions have been poured in just to prop it up. Clergyman Pete, I ask you, are you worried about where your money might be right now?
No, because I haven't got any. But I can see that there's serious issues with what Joe Biden has said. I mean, there's a standard insurance in banking in America, isn't there? That up to a certain amount you're insured.
$250,000 US, folks.
Yeah. But above that, you're not insured. But what Joe Biden appears to be saying is that they're going to pay it all back, at least for the Silicon Valley Bank problems, and that would come from a fund set up the banks pay into. But of course, that comes from investors in the banks. It still comes from the people, whether whether it comes from tax or from that fund. So a little bit of politics by Joe Biden, but obviously trying to stop the panic. Particularly as if companies with more than $250,000 in the bank, which were, I understand, is most of the people, most of the companies that have their money there. That you'd suddenly have some well-known companies, in fact, going under. Good news, Mark. I understand that the Bank of England has reiterated its statement. It's already said it. It said it again. Yes. And if someone feels they have to repeat something, you just know it's true. They've said that the UK banking system is not at risk, and I quote, remains safe, sound, and well capitalised.
Well, we can sleep at night.
Yeah, so I'm glad that they repeated that, because if, as I say, if you go on saying it, it must be true. Must be true. But just seriously, for a moment, just looking at what's happening, it does seem like a game of dominoes. Not a game, really, of course, quite serious, but still the domino effect of one falling, then another. But there was a particular flavour to the Silicon Valley Bank. I mean, it's not that well known to your average person, whereas Credit Suisse that you mentioned is like a household name, isn't it?
Yes.
But obviously an important bank to certain companies, especially tech companies. And yet they had an executive whose job was to spearhead woke programs, things like LGBT plus safe place for coming out stories, and a month-long campaign for LGBT pride, and a blog emphasizing mental health awareness for such young people. Now, was this, do you think, part of the problem? Here's a quote: "As a queer person of colour," this is the executive saying it, "and a first-generation immigrant from a working class background, there are not many role models for me to see growing up." So it's seen as a personal agenda in the bank. Do you think that this was part of the problem that Silicon Valley went under? I mean, Was it focusing on the wrong issues instead of trying to looking after investments? It was focusing on the woke agenda.
Well, I'm not saying that the woke agenda didn't play a part, but no, in my opinion, the main reason why this bank went down was because it did not learn its lesson from the past. What this is that Silicon Valley Bank, SVB, primarily typically invested in technology industries. Now, what we've seen, if you take a step back, look over what's happened in the last 2 years, we have seen a lot of tech companies through the 2021-2022 period, really their businesses booming, share prices increase, the value of technologies increase, but that was never sustainable. In fact, many people predicted they were overinflated. In fact, more importantly is that some of those organizations were never going to be able to continue in that basis. And if you look at what's happened in the technology industry today, where actually their businesses are now starting to collapse. If you look at companies, whether it be Microsoft, Google, Amazon, even organizations like Facebook, they've shed a lot of staff. They've cut back. They've cut their cloth. Now, for organizations like Silicon Valley, I think they were too reliant on one industry. We saw this in the dim and distant past. I say that it's not that long ago, but when we went to 2007, 2008, 2009, too many banks, as we know, went and relied on one industry. That was the subprime market. Now, it's not the same scenario. Times were different, trends were different, the industry was different. But the point being is this. I think that we haven't learned, or certainly the banks have not learned the lesson, that when you standardize on one industry and the model gets too focused on a boom-bust industry and you're pushing at the edge, here's the other side where I think the governments have not helped. Like a raging bull or a very ravaging wild dog, if you let it off the lead, it will cause mayhem. It will devour things. In some cases, it will do very well. That's the banks, basically. And you have to rein them back in. And if you don't have the right legislation in place with the right mechanisms, these are the type of things that typically tend to happen. The knock-on effect means that either businesses themselves can't get the cash flow, similarly when they come into crisis where either consumer or small businesses, medium and large, want their money out, then you get a run on the bank, digitally or in person, where they try to get the money out of the bank. And so what you're seeing is that governments, and this is the other side to the worst part of it, which is the failing of the system. Because what we saw about 15 years ago is that the governments of the day, whether the American governments, the European governments, etc., were in a position where they could bail them out. They had the money. They basically put the nation back into further debt to bail out. And so this is a different situation where governments are already stretched on debt. So we've got a situation where there is a threshold and there is a commitment from governments. You quite rightly say that, there is a threshold in America. In the United Kingdom, it's £85,000, which in the current rate is just over $100,000. And that's for any investment a consumer has with a given bank. Now, that's a relatively quite a lot of money for any individual. Sure. Now, here's the thing. We now then are not only questioning the judgment of those who are running banks, but we're also now questioning governments in how we've got to this situation. Again, in the title of the show, the again, I think, is really worrying. So are we now at a point where the system is under evaluation? And I think that it is, because if you listen back, folks, to Mark and Pete shows, we talked about what is the next crisis. We're at a point where I think that we've had the crisis with the pandemic. We've had crisis, obviously, in previous bank scandals and issues. We're seeing this unfold again. And I just think that the whole model needs to be re-looked at. There is another element to this as well, because cryptocurrencies have also sort of surfaced. And what's interesting is the failures have come just after troubles with another third bank, a crypto specialist called Silvergate, and that was forced to wind down as well. So it's not just the traditional banks, it's also those cryptocurrency banks where people have been investing, trying to make a fast buck. It can't work. We almost have to go back to a different time. Do you remember the days, Clayton and Pete, when you had to almost, even as a consumer, justify getting a loan from a bank? And even if you were a business, where you had to go back to those measured approaches, measured approaches to how you get your business a loan.
It did used to be very difficult.
What's happening here, that we're seeing a meltdown on all levels.
So, no, that's at a bank level. You could be far more stringent with credit that's given, and you could be far more stringent about the amount of risk that could be taken on by the bank, because of course they're investing other people's money, and so you could put a more stringent limit on what the fraction is. We're talking about fractional reserve banking, how much you have to have actually reserves now.
And interest rates are the other factor as well, because they're very high, and of course people having to pay back, and so this is borrowing money is a real issue here, especially the SVB's issues.
Yes, that was their particular issue, wasn't it? Because they had to buy government bonds, and buy back government bonds rather, in order to release money, and of course the interest rate had changed during the interim,
significantly.
Therefore they lost a lot of money in the transaction, but they needed the access to the money in order to pay back creditors. But yes, I can see that that's an issue. I mean, do you think that maybe it's a bigger problem in the whole of the system needs to change? We need to go back to the gold standard where actually money relates to something physical.
This is my personal view. I don't think there's the appetite for a lot of governments and banks to do that, but I think that there's a point here as how many lessons do you need to learn. Now, whether it's the gold standard or something like that, there is something that needs to be brought back, reined back in to a different world that perhaps, as I said, will enable us to have more stability. Because I think that when you have banks that push themselves to the limit and take big risks, you're not just putting the bank at risk. It's, to your point, the domino effect. It affects all businesses. It affects all livelihoods, pensions. This is the other thing that we haven't talked about. The knock-on effect is quite chilling in terms of what the slowdown will be. Now, will it mean a total meltdown? Perhaps not. I think that there are. I know that you sort of mocked the Bank of England a little bit, but I think that they have tried to take a bit more of a measured approach in terms of safeguarding another shock.
Yeah.
However, they are still going to be affected, because irrespective of what happens with the Bank of England and whatever businesses in the UK and Europe have been doing, the fact is that if American banks or even Asian banks struggle, you can see even share prices in across the world in banks, in Japan and many others are struggling. They are going down.
Yes.
And this is where I think that it now needs a plan, a stepped plan. Not overnight. We're not going to suddenly change the world overnight, but it needs a step plan to think about how we now go back to possibly using more cash, where I know that there's been a call for more cash. There's very much an appetite for the digital world, push-button world in which we're in, where it's much easier to make quick profit, but it's also make quick losses.
Yes, I think that's a good point. Use of cash does make it more difficult to simply create money out of nowhere, which of course is causing inflation.
Yes.
Well, it used to be called printing money for that reason, but now you don't need to print it. You just change the numbers on a computer database. Right. So it's just too easy to do it. I think you're right there. But do you just taking a step back for a bit? Can we just look at the causes of what happened here? I mean, if we just think back just a few short years, we had a couple of years of being locked down, whole economies closing down in most countries around the world, including the countries where the banks we've referred to are located. So I mean, hasn't that had an effect? I mean,
well, it has, and I'll explain
is that
why.
part of the reason behind
it's not the only reason, but it's one of the reasons. One of the reasons financially why it was flawed to lock down businesses was that a lot of businesses under a furlough system, meaning that governments effectively mothballed businesses. They paid staff, they gave companies summer money during that period where they couldn't trade. Now, the challenge with that is that often what happens, as most economists will tell you and analysts will say, when the market opens up, it is an opportunity for businesses to prosper. But the downside is that mothballing businesses that were failing anyway will fail even more in an uplift economy. Now, what you're seeing is this wave. It's like an ocean waving up against the shore. It comes in sort of these cycles, and what we've seen here is a lot of businesses, as well as banks, ironically, struggling, who can't either compete or they've overcommitted themselves. They've got themselves into a bigger wave than they were expecting because of interest rates, the paybacks, and the loans that they need to commit to. And ultimately, the strategy was wrong. I don't have a problem in a short-term lockdown, but a long-term lockdown, which was for some, certainly in the United Kingdom, over a year. Yeah. And that is just bizarre. Economically, that was just flawed. And I think that it's not the only reason. I really want to make that clear, because I think there have been maverick practices that we've talked about anyway. But it certainly didn't help, and timing was not good.
Yeah. Now, Mark, as the businessman of this duo, you've been talking about what you see as a way out of this, with a proper planned, stepped approach to bringing the banking system into a more responsible way of operating. But assuming, as I think we must, that that's not going to happen, then what is going to happen? I mean, what do you see? The idea of being red-pilled, where you suddenly see that there's a big problem despite the Bank of England telling you there isn't, and that sort of thing.
I think that it's going to be more pain.
There's another pill, but I was just going to say the black pill, when you suddenly realise, it's all going wrong and no one's doing anything about it. So what do you think? What do you see happening?
I think there's an irony, and we've seen this again, folks. The word again is, look what happened in the 1990s when Britain itself was fixed to the ERM, and certain people made billions out of that because we as a nation lost out. But the mechanism of finances is that we're seeing today there will be a lot of people who will make profits as a result. There are certain models and mechanisms of investments, but they are very few. The vast majority, and the consequence will be to pensions, to businesses, to livelihoods, and so on. And I think that what we'll see is a period of recession. But I know, in fact, many people will recognize that we're probably already in that. Technically, probably not in some countries, but others, yes. But yeah, absolutely. I think that what will happen is you will see a merging and a converging of banks. And I don't have a problem with that, because in some ways that will help out in the short term. Long term, no. I think that the whole model, the mechanism, needs to be rethought. Otherwise, very few of the people who are running our society will gain, and the most will have pain.
Yes. Well, I see that, and there's a nice little line at the end there about pain and gain. But yeah, I think there is one final thing to say, though. If that's the case, what of the world? What of the Western societies, the countries in the country in which we live, and its whole of Western culture? I mean, is it on its way out? Are we seeing a realignment in the world as our banking system fails and so much else is just skittering out of control, including the moral fabric of the country? Is this just part of an overall meltdown of the whole of the West? And if you need this translated into Chinese in order to answer, please let us know. Make sure you subscribe, leave a comment on this and every episode. We'll be back even if there's a complete financial meltdown. See you next time.